Hi, everyone. Thank you for joining the 21 Shares Analyst Call. Hany, thank you so much for making the time. This is actually a special session that we have today. And this is special in the reason because we had so many events that happened over the past week or so. We were on the cusp of having a banking crisis in the US. I want to pick up your brain. So essentially, guys, I want to have a fireside chat with our co-founder and CEO, Hany Rashwan. So if you haven't met Hany, Hany, why don't you introduce yourself for a few seconds and then get started?
Sure. I've been with 21 Co for 4 years now. Before that, I did 2 fintech startups out of San Francisco. We successfully learned a lot of lessons on the first one and sold the second.
This is fantastic. So one of the reasons why I'm super and incredibly excited to have you here is because finally, the narrative around the non-state monetary system for Bitcoin is picking up steam. But can you tell us exactly what happened with the various banks that Circle and other companies were using? What happened exactly?
So there are a number of ways of explaining this. I think the thing that is my favorite is just looking at it simply. I think a few years ago, if you look at an institution like Silicon Valley Bank, they had about 70 billion of deposits. If you look at it a year ago, a year and a half ago, 2 years ago, it suddenly ballooned up to 200 billion. Why? Corona happened. And at the very beginning, there was a lot of uncertainty, but the stimulus was so strong from governments around the world that it then fueled a boom, a bubble in many different areas, including a lot of consumer goods, consumer products, internet goods, etc. And so I think we saw a lot of exaggerated effects on stocks like Zoom, which were on, right? And things like that. I also believe that we started seeing some of this play out on the banking sector in this instance. If you're a bank, you obviously need to generate yield somehow. And Silicon Valley Bank is one of the strongest in the technology world, if not the strongest bank. Like for a lot of us in the tech world, the fall of SVB is a huge surprise. But the issue that they were grappling with, and part of the reason that they're in the position that they're in right now, is that they suddenly had an additional about $150 billion that they were not generating yield on that they needed to figure out. If we go back in time and think about where were we then and how were we feeling, we were experiencing 10 years of no yield whatsoever.
Yep.
Here in Europe, we were paying for banking. In the United States, where free banking is much more the norm, banks were still able to generate as much yield. There were issues, especially with smaller banks, regional banks, et cetera. And what ended up happening is that SVB, in their portfolio allocation, included a lot of very long duration, 10 plus years, held to maturity with obvious penalties for selling earlier and things like that. And I believe they bought just under $100 billion worth of mortgage-backed securities. Then you fast forward to now, and we've seen rate rises that are exceptional also around the world. Interest rates do not normally go up 4% in a single calendar year. And banks are very rightly confused and unable to play that card really well. It's a challenging card to be dealt if you're a bank. Some banks have been more conservative. Some banks have been more lucky, and a bunch of banks are trying to sort this out, especially these smaller banking institutions. But I think it's a natural evolution of the rise in interest rates at this level. And in the same way that we saw this have many ramifications, we should see similar things come out as well.
Absolutely. And to give some numbers to the audience, about 40% of the companies that IPO'd last year were actually having a banking relationship with SVB. And some of them actually are crypto companies like Circle, right? So for the first time in 4 years, Circle, the second largest stable coin in the market, fully collateralized one-on-one with US dollar, actually collapsed to 87 cents. And the reason why we've seen that is basically a bank run across various banks that actually many crypto companies were actually taking for granted, like Silvergate and Signature Bank, the Silicon Valley Bank, of course. And to really provide more transparency here, about 3 banks where the cash for the Circle reserves was held were actually affected over the past week or so. So that means that essentially they were a lot of cash at risk where it was impossible to redeem until the Federal Reserve actually issued a statement with the Treasury to actually reassure the market that they're going to backstop the depositors. But right, Hany, it's not the equity holders or the debt holders of the banks, but actually it's a backstop of the depositors. Very different from like the great financial crisis. So maybe you can give some, I think, insights into, is it a bailout? Is it not a bailout? How do we call it? Because that's very different from 08, right?
Yeah. So this goes back to a fundamental question, which is we all have bank accounts. When we're depositing money at a bank as consumers here at Credit Suisse or UBS in Zurich, do I think about that as a deposit at the bank where they're safeguarding my assets? Or do I think about that as a loan to the bank?
Yeah.
Now, I would argue that most people, depositors, are not thinking about their deposits as money that they're lending to the bank that could have credit risk. I think most people think of these as deposits that should be safeguarded, regulated, and pretty secure. I don't think that they're expecting that. For what it's worth as well, if you look at the flip side of that, I don't think depositors are paid as if they were loans either. Think about how much interest depositors make, including in the US, especially in the US, and tell me how that is actually the deal. That doesn't make sense. I would argue depositors are not compensated for that risk at all. And what the regulators have come out with is a very strong statement in support of depositors, which ultimately is all that we and the rest of the community were advocating for. Everything that Ellie said is absolutely right. SVB by itself, and there's two other banks that failed. SVB by itself was the 16th largest bank in the United States, not a small bank. And this is not a crypto play either. SVB was actually not a crypto-friendly bank. They would bank some of the biggest companies in the space, but by and large, they were not accepting of many crypto companies. And so what really is happening here is bank run on the 16th largest bank, which had some issues with treasuries, which had a challenging 10 years of government policy and a crazy stimulus and a pandemic, and really trying to think about how this impacts the tech sector, which this is a very important part of, as well as the wider banking sector, because as the 16th largest bank in America, clearly this is a regional bank and other regional are paying very close attention.
No, absolutely. But the reason why they were not able to meet the redemptions and considered as insolvent as well is because they were not hedging against the interest rate risks, right? So there's also the opportunity for these banks, basically having exposure to billions of dollars in unrealized losses, to hedge against that with swap lines, right? But the key silver line that we've seen over the past 7 days is that the Silicon Valley Bank was swimming naked, unfortunately, which means that essentially they were not expecting the interest rates to increase significantly over the past year or so, with the fact that the inflation rate was actually very high. But we've seen like over the past 24 hours that the CPI numbers are actually flat year over year. Do you expect next week with the Federal Reserve meeting that they will increase the interest rates, or they would try to really calm down the economy here? I'm just really trying to pick up your brain here, because that would have a definite impact to all of these other banks today that are actually still swimming naked without actually using any swap lines to hedge against the interest rate hikes.
I think it's very hard to see a world where they are aggressive at all. And given where they were, it wouldn't surprise me if it slowed down in some way. That would make sense. A lot of people are really worried. I think one of the things that this past week has taught us is the power of communication. Like the biggest error that SVB did was actually mess up their communication, talking about these issues. These are issues that a lot of banks in the United States have over the past few years, especially. There's a lot of held to maturity securities that are currently underwater. If you're holding them for 10 years, that matters a lot less. That's a communication exercise, and one that we saw First Republic do really quite well, and a bank like SVB not do as good a job on, with disastrous consequences for the ones that were not as on top of it. And so if you think about sentiment right now, it's quite weak. People are worried, and any sudden movements lead to some very exaggerated effect. And we're seeing this with a lot of banks, not just in America, but around the world as well.
No, that's right. And interestingly, we've seen the latest rally right now in the crypto industry increasing significantly. Now Bitcoin is above the 200-day moving average to levels that we haven't seen actually before the collapse of Luna and Terra, and of course, FTX. But interestingly, I want to reiterate here the failure of banks, the failure of specific companies building on top of the crypto layer is very different from how the technology itself is innovative and changing the world. We've seen that in the past, in the early 2000s, with the collapse of Enron, one of the kind of fraud that we've seen actually at that time, but also companies without fundamentals like pet.com and Webvan. But the technology stack for the internet, like TCP/IP, SMTP, the World Wide Web, HTTPS, never failed actually to work and actually provide a way for Hany and I today to provide you guys actually this webinar, thanks to these internet protocols. So I think the silver lining here is that the technology behind it is really stronger than ever, right? And that most importantly, we cannot confuse the companies leveraging the technology on top, and most importantly, the technology that enable these companies to make revenue, and most importantly, to provide access to banking services, right?
And I think this is a very important inflection point for crypto as well. For
Yeah.
those of us who have been in crypto for a long time, there are some things that we very clearly remember. I really remember the Cyprus banking crisis, for example, because it had some ramifications in the crypto world, even though I'm not Cypriot, I don't live there. And similarly, I think, and what we're experiencing right now is going to be remembered as a very major inflection point in the history of crypto. A bunch of us at the firm at 21Co worked the entire weekend, making sure that our company is safe and secure, and making sure that our customers are safe and secure and their investments are safe and secure. And I think we've announced this already. We have no exposure to SVB or to Silvergate as a company. We did not ever have bank accounts there, but we have a lot of counterparties in the tech industry. And so it was a challenging weekend for a lot of us, but I don't remember the demand reaching the levels that we saw on the weekend. And it's really important to just take a step back and remember that when the banking sector had, at a minimum, a lot of worry and fear, the system that was up and ready and open for business on Saturday, on Sunday, on Friday was crypto. And a huge part of the rally that you see now was probably bolstered by that. The fact that when the traditional financial system had issues, when people were worried about the traditional financial system, crypto was working just the same as it was 10 minutes ago, and just the same as it will 10 minutes from now, and actually led to a lot of help in this area. And so this is a very important moment for crypto, for tech, and obviously for us, as we sit at the intersection of both.
Absolutely. Do you also expect any, I would say, consolidation in the banking services? Because we know that there are some crypto companies like Kraken, for example, that do have a banking license in Wyoming, right? But these are like a very different type of banks because they're fully collateralized, full reserve banks, right? Where they cannot actually use the deposits to invest in long-term treasuries or even short-term treasuries. Do you see a place for these banks going forward? Because I think there is a misconception now in the US that now the crypto industry is unbanked. Not true, because we're still seeing that.
We still have some bank accounts in America.
Exactly.
I think it's, there are a lot of banks in America. I think people don't realize just how many banks there are in America.
Yeah.
With credit unions, with financial institutions, et cetera. There's close to 10,000 such entities in America, which is a lot of entities per person. If you look at it and graph it historically, you can see that there was a certain time period where a lot of the licenses went a little bit crazy. And so how can I be against potential consolidation happening in the space when the US amount of banks that there are in America are very large? And we're seeing already consolidations. I think HSBC bought SVB UK for a single pound. And I would expect to see more consolidations overall across the whole industry, across the whole economy, in numerous different ways, not just with banking, but clearly this is going to be a year of consolidation across the board. The public markets have been the same. The private markets are still struggling. And we would expect that a lot of these smaller firms will not be able to survive this coming time period.
Hany is so interesting because the first transaction of Bitcoin that happened back in January 3rd, 2009, there was a specific message that was calling out a bailout, actually. And fast forward to 14 years later, we're seeing that as well. But these are not typically the bailouts that we've seen back in 2008. But it feels like there is an emerging and sticking narrative for Bitcoin as a non-state monetary system. But I think what I would love to ask you here is, where do you see that going? Because it seems like the contagion risks of especially the US banks is contained by the commitment by the Federal Reserve. But where do you see that narrative going for Bitcoin and other crypto assets?
So I think that's a very interesting and important question. Crypto has built a parallel financial system. That is what crypto has done.
Yep.
There are dollars and pounds and francs and euros on there. You're able to do a lot of things and you're able to do them around the world. That is a very valuable thing. And it's very valuable in light of some of these other bailouts, depressions, recessions, tough times, et cetera, that we see. It's giving people a lot more choice. I think that there's an expression, the cat is out of the bag or the hat. It's done. I don't think you can put Humpty Dumpty back together. I don't think you revert back in time, because what we've seen this weekend is that when people need it, it's there. A very famous venture capital called Chamath of social capital called Bitcoin schmuck insurance. And specifically, he was saying it's insurance against the government doing something stupid to me. And we're seeing a lot of validation of that. In addition to that, the really bullish thing is that crypto is quite early. It wouldn't be such an investment if it was a more mature market. We clearly need to build a ton more usability. Our user experience and our user interfaces are not good enough. We have about 100 million users or so. How can we get the next billion? There are a lot of these kinds of questions that crypto still needs to answer. But my assessment is, if it's already this attractive, such that top 20 banks are failing and people are trying to jump into this and safeguard their assets. And we've seen this play out in similar situations in other countries, Cyprus, Greece, the Turkish inflation crisis that we've seen over the past few years. The fact that all of that is for a system that we still believe is fundamentally missing core features, still being built, is actually the most bullish thing. Because if you give someone something and a smaller, incomplete version of it is so attractive to them, that says something about what you're fundamentally building, as well as what they're demanding and the likelihood of us blowing this out of the park completely and giving them something that they don't even contemplate. Because if you liken this to the internet and you go back, it was impossible to describe the world as it is now with this Zoom webinar in 2023, back when the internet was created. But it was still quite possible to be super bullish on the internet recreating everything, but just difficult to estimate. So that's how I see it. And I think we've done so much for this stage of where we're at, which is still quite early.
No, it is super early, especially when we have less than 2% of the global internet population having access to crypto assets. It's incredible. What is even more incredible is that people always compare Bitcoin to digital gold, and then Ethereum is the app store where you can build any applications around the world. But we're seeing a growing ecosystem now on Bitcoin with NFTs and DeFi. So now we're seeing both things, where there is this non-state monetary system and this almost like global app store for any types of applications. Where do you see that ecosystem growing as well, alongside the narrative of the non-state monetary system against a government that unfortunately fails at the residents?
I think similar to a lot of other products, we'll see all of this. We will see some styles in this manner, other styles in other manners. And I think that if you think about it from the investor's perspective, more variety is probably a good thing, because you then get more choice based on what it is you are looking for. We've seen this play out in mobile. Clearly, there's an Android and an Apple app store, but there's actually a lot more of them. And especially, you can go to certain Asian countries and be completely part of an ecosystem that is its own app store, that is a wonderful economy by itself. And I would see a lot more of this. And so what will exist in crypto, what people are looking for, and what are people looking for? A whole slew of different kinds of things. I'm not a big fan of, I think it will consolidate here or there, although we may get app stores that will get 80 or 90% of the traffic, similar to how iOS and Android are clearly dominant.
Absolutely. So let's talk about our best, neutral, and bear case scenarios. So when we were thinking about these webinar together, we were putting the 3 scenarios that we could see going forward. And of course, we have to be very nuanced when we are looking at the world, because there is also a lot of unknowns. So clearly, the Silicon Valley Bank has been backstopped for the best case scenario. When you look at the left, and Silvergate is going to make the customers whole. Circle has finally actually retrieved the peg to the $1. Do you believe that the Fed won't increase the interest rates? And what probability would you give that to that best case scenario for next week? I think that's still the missing part.
I think the amount of uncertainty that we have in the market right now makes it very difficult to guess this. The only thing that I feel confident about is I obviously don't think that they're going to be aggressive. And so whether they raise it less, whether they do whatever, it will be something in that bucket, I feel. Yep. Everything else has already happened according to our best case scenario. The depositors of SVB should be fine. Circle has repegged to $1. And if anything, one of the things that we're starting to see right now, and it's a bit of a weird situation, but it's almost like there are 3 bank types in the United States right now. And the banks that are in receivership by the FDIC are one kind of bank. The banks that are in receivership right now have fully insured deposits and not up to the 250,000, because the FDIC has indicated that depositors will be made whole. And if you look at Silicon Valley Bank, it turned a profit. I think they made $6 billion in revenues last year. Yep. And so there's now a weird scenario where it's possible that SVB either has a safer landing, a friendlier home, or can be brought back. And I've started seeing a lot of friends and partners from Silicon Valley actually putting their money that they have made wired out as part of the $42 billion that escaped back into SVB, because they deem it to be so safe, as the FDIC has shared that all depositors will be made whole. So I also think that the next week or so is going to have a lot of interesting data points that will have to be taken into consideration here.
Yeah, absolutely. Do you think that there is potentially as well a spread of contagion with other banks in Europe as well? Because we've seen, of course, like the markets, especially the sector of the banking industry, really having a really hard time, especially since Monday. The market has rallied a little bit on the back of the CPI numbers yesterday. But do you think that's a possibility as well?
Yeah, it's a little advanced for this call, I think. But if you, there are a couple of things. First of all, European banks have had their own problems for their own reasons for the past 10 years. Some of those problems are unique to them. We would expect different banks in different areas with different regulators to have different problems. Some of those problems are regulatory. Some of those problems are structural. Some of those problems, for someone that lives in Switzerland, Credit Suisse and what's going on there. There's a lot of difficulty in navigating what is a very challenging time right now. And some banks are doing it better than others. Some banks have gotten luckier than others. Without getting too much into the details, part of what pushed SVB off the cliff here is unique to the United States. And if you look at bank capitalization ratios, requirements, and regulations in America, and some of the exceptions that SVB historically got, there's no real parallel to Europe, and European banks capitalized a bit differently and a bit more conservatively. So we wouldn't assume that there would be an issue there on the same level as what we're seeing. Now, as you said and alluded to earlier on the call, a lot of people are panicking. There's a lot of fear in the market. Fear is irrational in the short term. And as I said earlier, it is a very challenging environment to have interest rates rise up this much if you're a bank CEO in a single calendar year. And so will it remain challenging? Absolutely. Will European banks experience some of these problems directly and indirectly? Absolutely. Is it a different situation? I think so.
And you know what's interesting with the rise of the Bitcoin price is that in the worst case scenario that we had was that the miners could also face some headwinds and some cash requirements to meet their capital expenditure. But now we are well above the cost of production for Bitcoin. It depends where the miners are based, but about 40% of the market share and the lion's share of the mining market comes from the United States. And the price of production is about $12,000 and $20,000. So we're well above that. So that's a caution as well for the miners. I think treasury management will be very important as well to limit the selling pressure in that regard. So when it comes to the worst case scenario for the miners, for now, I think they're pretty much safe thanks to the fact that we're well above their cost of production in that respect.
It's also important to mention that in the United States, the federal and the state levels do have different impacts for different activities. And so, for example, something like Bitcoin mining, I believe the top mining destination in the US is Georgia.
Yep.
Actually. And then Texas, obviously, and a lot of other places. There's local support and local power to do such support for the miners that does not exist, for example, for the bankers. And so previously, Ellie mentioned Kraken having a banking license and it's a fully reserved bank, et cetera, et cetera. It's a very pretty license. There's not much more to it. It's actually not recognized by other states. It's a Wyoming state charter that doesn't have access. Part of why miners are having an easier time is actually the industry and their regulations are structurally much less complex, with the right incentives given to their local politicians in ways that are much better aligned than what we're seeing in banking, which is part of why they're getting different experiences.
No, absolutely. I think one last thing that would be very interesting to think about is that despite the uncertainty, there is a growing ecosystem of brain drain from traditional finance and tech giants actually to build on these protocols to make the ecosystem safer and building some of the innovative applications that our kids and grandkids could take for granted. And I think that's really the silver lining here, that actually over the past 18 months, with every debacle that we've seen, the technology has never failed the customers. And that's really a bright future for this space for sure.
We've seen the price of uncertainty that the market will take from you. And it's quite lovely in this world to see something that is fully at all times auditable, with no central control, that works as planned, without issues, and without very clearly any uncertainty. We do not know how Bitcoin will be denominated in dollars in a day's time, but we do know that blocks will happen about every 10 minutes from now until forevermore. And that is something very special here.
It is super special, absolutely. So we're almost at time, and we like to have about 5-10 minutes of Q&A with the audience. So feel free to post your questions directly in the chat. Next to polls and quizzes, you will see the Q&A session. Please feel free to ask any questions that you have in mind. There is actually a cool thing that I run into, Hany, that I want to show you and the audience as well, is that you can see in real time on a website called Mempool the different miners that receive the block reward every 10 minutes. So very cool.
I've seen that.
It's very cool site.
Looking at mining is very cool because you realize just how consistent crypto is. It's just activity at every minute of every day.
It is extraordinarily fascinating. So let me show you here. Exactly. So you can see the miners. So about like 40%, actually 33% now comes from Foundry USA, and then the remaining N pool and F2 pool. This is really incredible. When you click on Foundry, you can see all the addresses as well, so that you can see their position on the market, the hash rate, so the computing power. That's an amazing website. So if you're curious about what's happening behind the scenes for the Bitcoin network, how secure it is, check out mempool.space. This is an open source website, and you can also track their addresses as well. This is really an incredible work that they've done. Actually, we have a question from the audience. Let me read it to you. Where do you see the price of Bitcoin end of the year? So we don't have a crystal ball, but if you have 3 scenarios, neutral, worst case scenario, where would the price of Bitcoin be?
Before the recent banking crisis, I thought that crypto would be flat, up a little bit, down a little bit, mostly flat for the remainder of the year. I've been on similar panels and I've said the same thing. I think that when you shake people's faith in the banking sector, and there's an alternative banking sector that works in some ways better, that is a very bullish signal. I do not think this latest bull rally was expected by any of us, in the same way that SVB's collapse wasn't expected by the market either. But what it shows is that there's clearly a ton of strong demand for this. So given all of that, if we continue with this same negative momentum, clearly crypto will decouple. We've already seen that, by the way. There's a lot of research. We were talking about this the other day. Year to date, Bitcoin is moving in the exact opposite direction as U.S. banks index ETF, is what I meant to say. And so that's actually a very nice thing to see. Bitcoin specifically, and crypto more broadly, because it's so correlated with Bitcoin, decoupling from this in an era of risk is a very good signal. It's important to note that some of the drops last year happened in part because the world was ending, but in large part because our own crypto world was so over leveraged. Yep. And so I openly wonder where Bitcoin would have gone, where crypto would have gone, had we not had the scams associated with FTX, had we not had the idiocy associated with 3 Arrows or Luna, etc. Because looking back at it now, there was a lot of downward pressure on the assets even then. But now, looking at all things being equal, it is great to see Bitcoin rising as we're having a traditional crisis. If that happens, we have price estimates for the bull case of Bitcoin, and clearly banks failing, bank runs happening, Bitcoin going up, data point there that is very helpful for our thesis.
It is really incredible. And also, I think the thing that you mentioned here is very important as well, is leverage. We're seeing less leverage in the system now that compared to the last 2 years, because of course the cost of capital was a lot cheaper for the past 10 years compared to where it is today. But this is a spot-driven rally, which is actually very fascinating, from the risk of liquidations, the risk of course leverage that we have seen actually over the past 18 months. So that's actually one of the other silver linings as well that the audience will need to remember.
And certainly the system is healthier now.
It's healthier, exactly.
It's exfoliating is what it, and you often need to do that. Do you have another question?
We do have another question from Dominic. Hi, Dominic. Thank you for coming in. So do you think, and that's a question for you, Hany, do you think that with the Shanghai upgrade for Ethereum, institutional adoption will lead the next bull market? So for those who are not familiar with the Shanghai upgrade, so essentially Ethereum now switch away from an energy-intensive way to process transactions to a planet-friendly way to process transaction called proof of stake. But when you stake and you try to basically validate the transactions, essentially for the past 2 years, the assets were locked on the network. With the Shanghai upgrade, basically you're going to have a redemption feature so that the validators of the network can withdraw their funds. So that's a big deal to have, of course, the withdrawals available on the network, especially for hedge funds that tries to rebalance and over strategies that prop funds may have. But yeah, what do you think, Hany?
I think you see what I'm seeing. Here at the firm, we have generally seen an uptick in real interest from institutional players.
Yeah,
big ones writing 9-figure checks. Now, obviously, it takes them a long time to allocate those checks, but it's indicative of something, and it's indicative of how the market is looking at this ad and what its needs are. I think institutional money is clearly one of the things that can propel us forward. I think our own app development, use cases, etc. It's important to remember that some of the previous rallies were actually self-made. I think the ICO boom and bust is at a minimum actually a technological innovation, because we allowed ICOs to happen, experimented with them. A lot of people made a lot of money. Some people lost money. And that was an interesting experiment and an interesting development. We've seen the same thing with DeFi Summer or Solana or Avalanche, some of the layer ones, some of the use cases that we've seen on top of it, all the NFT gaming, NFTs in general. And a lot of that we've started seeing more and more of, and that could also propel us forward. Geographically, we're still siloed in a lot of areas. And so one of the ways to look at not just this rally, but the previous rallies of just in the last 3 months, what has been more bullish signals, it's all coming out of East Asia. So we're still geographically siloed in a number of ways. We're geographically limited in a number of ways. Clearly, if a country like China were to open up a little bit more or just loosen the rope a little bit more, that could have very high effects as well. So I think we can invent our way out of this. I think we can have geographic additional growth. And I also think the institutions are very important and are finally getting close to allocating some serious money.
Absolutely. And it's a good segue to actually the third question that we have is specifically for the US market. Is a spot Bitcoin ETF around the corner in your view if the SEC will lose their case against Ripple? So that's, I think, 2 questions here. So the first question is about the Bitcoin spot ETF, and the second one is the SEC may lose against Ripple. We don't have a crystal ball, right?
No crystal ball. No crystal ball. Never ran into a crystal ball either that worked. I won't say anything directly about the US Bitcoin ETF. We're obviously in the mix. We're obviously very interested in bringing American investors safe, reliable, regulated, professionally built products in their banks and brokerages to access what we think is a very nascent but burgeoning and exciting asset class that is being created from scratch and will have an incredible amount of impact over the next several decades. Given all of that, it is clear that a US Bitcoin ETF will not happen anytime soon under the purview of the regulators as things stand. If you look at the literature that they have shared, interviews that they have shared, it would surprise a lot of people to see something like that happening soon in the short term. So while I'm super confident on us and others on the medium term, not so sure about what this looks like in the short term. Now, the obvious exception here would be if somehow something was court-related. There's obviously a very famous lawsuit happening against the SEC by Grayscale. It's unclear how that will be ruled. And what's even more important is that it's unclear how that will be enforced. There are numerous scenarios for a positive ruling in that case and no Bitcoin ETF. Like, the case does not automatically mean that a U.S. Bitcoin ETF or that a U.S. Bitcoin ETF by that issuer that is suing will be accepted. There are still numerous ways that this can be denied, and I would assume that this is not going to be a quick way. Now, obviously, if something happens in the court that is so strong, maybe that pushes it in one direction or another. We're starting to see some of that in the US, where it is clear that some of the enforcement is going to happen through the court system. The famous thing that we're seeing now, the SEC has shared their view that Bitcoin is not a security. They have been a little bit more confusing with Ethereum. And with all of the rest, depending on who you ask, either insinuated that they're all securities or at least did not provide official guidance. Some of that sentiment has been used by the New York Attorney General's office. And again, the US is a federal system. States have a lot of rights here. The New York Attorney General's office is now alleging that Ethereum is a security and suing a foreign exchange using that. Clearly, this is something that not a lot of people in the crypto world, or I would say in the tech adjacent world, would agree with. And clearly that is, as we're seeing now, something that will be resolved in the courts. So if more is resolved in the courts and other areas of crypto as well, I wouldn't be surprised. But in any case, I don't think we will see huge surprises, and I don't think we'll see something in the short term.
No, I couldn't agree more with you. And it's hard to actually see also the causation as well. I think these are two different things, but these are amazing questions, guys. Thank you so much for your time. I think we have one last comment. It's not a question per se.
Let's do the comment.
The reason I'm asking is because the SEC said that the spot Bitcoin ETF would be used for manipulating the price of Bitcoin. Futures-based ETF, in my view, from the person in the audience, the problem would not be the case while leverage is used to manipulate the prices. Good.
What you'll find diving into it is that all the futures are based on, which actually, if you look into the lawsuit's details, is what they're actually talking about and alleging. And so far, that has been one of their stronger arguments. So I wouldn't dismiss that too much.
Of course. And also, like, for the futures-based ETFs, these are not based on offshore exchanges. It's based on the CME futures contracts for Bitcoin specifically. So that's a different thing from what we've seen with the leverage in the system, where we mentioned that there is a leverage risk, is because there is a lot of also other exchanges that provide very high leverage ratios on their venues. But these
and the issuers there in America have clearly done a good job. Futures ETFs, when they first launched, were not performing as well. There was sometimes a 7% delta between our NAV and futures-based NAVs. Now there's two big future-based issuers in the US. There's Valkyrie, I can't remember the other one, maybe ProShares. And we've seen tracking errors of tens of bips on them more recently. And that's something that indicates ecosystem is growing. We will have a Bitcoin ETF in America for American retail consumers at some point in the medium term. And internally, we're working every day on this.
Hany, thank you so much for your time. It's such a pleasure to have you on. We should do that more. If you guys absolutely love the session, I would love to actually invite Hany once in a while and hang out with you guys, explain what's going on behind the scenes, try to show you what we're seeing in the future. But Hany, thank you so much for your time. It's been great.
Of course. Thank you so much for having me.
Thank you, everyone. Have a wonderful day. Bye-bye.